Happy New Year. It's Jeffrey Christian. It's just before noon on Tuesday, the 3rd of January here in New York. This first video for CPM Group for the year. I studied international politics and economics as well as journalism in university. And I was happy to have Professor Marvin Rogers, who was one of the foremost authorities on Southeast Asia, as one of my professors. He passed away, I guess, a year or two ago. But he had known Sukarno when Sukarno was the president of Indonesia. And Sukarno had this habit of naming years. And he would give a speech at the beginning of the year and say, this is the year of Reconstruction. And I think in 1964 was the year he was overthrown. He said, this is the year of living dangerously. And it was. And there were many hundreds of thousands, if not millions of people in Indonesia killed in really revolution, civil war, and he was overthrown. I picked up that habit, and I've been naming years for several decades now. Last year, I had called the year of the unraveling, and a lot of things unraveled last year. This year, 2023, I'm calling it the year of transition. I think there's going to be a lot of changes. They'll be slow to be realized by many people, but I think there's going to be some important changes across the spectrum of politics, economics, finance, precious metals markets, personal lives, and society. But let's talk about what happened in 2022. Interest rates rose, and they rose sharply, but they remained at relatively low levels historically, and importantly, they remained at levels that were not so high as to throw the U.S. or world economies into recession. The world and the U.S. economy both experienced very low growth in the first half of the year. In fact, contractions in the United States real GDP in the first 2 quarters. But growth picked up substantially and surprisingly to a lot of mainstream economists in the second half of the year. We're going into 2023 having seen 2 quarters of relatively strong economic activity. Inflation began to moderate, just like the Fed and other monetary authorities and mainstream economists had expected. It is declining. It's gone from nearly 9% down to about 7% right now. And we'll probably see more declines on a moderate pace over the course of 2023. Russia invaded Ukraine, highlighting in the stark contrast between democracies and autocracies. China experienced its fiercest displays of public dissatisfaction with the government in a third of a century, really since Tiananmen Square in 1989. The government responded by backing off of its zero COVID policy and deciding to let people die en masse to prove the wisdom of its former zero COVID policy. All of this came after hardliners had purged moderates from the Chinese Communist Party. Prices are very interesting. Gold fell from the beginning of the year to the end of the year, 0.13%. Silver rose 3%. The Dow Jones fell about 9%, the S&P about 20%, and the NASDAQ about 33%. That's sort of how it goes. The Dow Jones is, a relatively small index of large cap companies. It tends to be less volatile than the S&P index, which is 500 companies, large and small. And the NASDAQ has a lot of very higher risk, smaller, more entrepreneurial, newer types of companies. And if you go back to 2001, you saw the Dow Jones and S&P fall, but the NASDAQ fell twice as much. This is a column from what we call a quilt chart, and it's just for 2022. And it's a relative performance from the beginning of the year to the end of the year of 11 different assets. Cash, or a cash equivalent, rose 4.4%. in 2022, and it was the highest performance in terms of start to finish increases in prices. Silver rose almost 3%, gold fell 0.13%. The next top performer, number 4, were high yield bonds, and they lost 11% last year. And you can see U.S. fixed income down 13%, developed countries excluding the United States equities off 14%, large cap off 18%, real estate off 22%. Other investments other than the U.S. dollar, cash, silver, and gold all fell 11 to 22% last year. It was a tough year for a lot of investors. But investors who had been invested in gold and silver saw some of their wealth protected. And that's why we buy gold and silver. What didn't happen in 2022? The dollar didn't collapse. Central banks did not undertake a great reset of international currency systems, nor did they cancel the use of existing currencies. Gold didn't rise to $3,000 or $10,000 or any of those other unrealistic price projections that have been out there for decades. Silver didn't rise to $50, let alone $100 or $750 or some other fantasy price projected for over the last several decades. And there was no great red tsunami in the U.S. by-elections. So what's going to happen in 2023? These are things that are perhaps the most probable to happen. And I want to draw attention to that speculative nature, perhaps most probable. Really knowing and understanding the uncertainty of the future is the number one key aspect for managing your life, your business, your investments, your finance, your wealth. You must be flexible and change your opinions as the facts and realities around you change. If you don't, you'll lose money. So what do we think is going to happen in 2023? I'm going to start with something that's not listed here. Truth will be harder to find, and the increased prevalence of misinformation will continue and increase. I mentioned just now that there wasn't a red tsunami in the U.S. by-elections. Some very interesting information about how a lot of the talk about a red tsunami, how the Republicans would sweep through the House and maybe even the Senate, as well as state government levels. A lot of the talk that was going to happen was actually propaganda promoted by Republican-financed pollsters. If you compared Republican-financed pollsters to mainstream pollsters, there was this yawning gap that grew over the course of the year. As mainstream pollsters say, yeah, the Republicans are going to make gains, but they'll be relatively limited, while the Republican-financed pollsters kept saying, oh no, we're just going to take over everything. We'll have a vast majority in the House. Now, I'm not seeking to criticize only the Republican Party. I'm using them as an example of what I just said. The increased use of propaganda by a wide range of entities will continue and accelerate in 2023. That's what happens in this stage of society. Looking at the things that we deal with most, economic growth will be continuing 2023. It will be weak, it will be low, but it will continue. A recession may emerge at any time, perhaps in the fourth quarter of 2023. 2024 seems more probable to us. There was an article in the Wall Street Journal today that talked about how some major banks are expecting a recession in 2023, but others are saying it's more likely to occur in 2024. That's the mainstream view. Interest rates will rise, our view is into the first quarter, We think that you'll see further increases in the Fed funds rate in the February and March meetings of the FOMC. They'll probably plateau then, and they probably won't decline or start declining until fourth quarter, late in the year 2023, as and only when recessionary economic conditions are more imminently apparent. Inflation will continue to moderate. I think the consensus is that headline inflation may be down around 5% by the end of 2023. Russia will continue its war in Ukraine. It will continue to go badly for Russia. It's hard to say how it will ultimately end. It could end with change of government in Russia. It could end with a change in the posture of NATO and the United States toward its policies defending Ukraine. There are a lot of scenarios. Wars are hard to predict and project how they're going to come out. U.S. politics will continue to be extremely dysfunctional, and that's going to be important when we talk about economic growth trends, interest rates, and inflation, because you're going to see fiscal policy, which has been one of the major problems behind economic activity, stymied by a continued stalemate in the government. I've said it before, I'll say it one more time. The inflation that we've seen and the slow growth that we're seeing now as a consequence have been caused primarily by fiscal policies, by the administration and Congress, not only in the United States, but really globally, and by changes in the fundamental supply and demand characteristics of the real economy, supply and demand for goods and services. There are a lot of people who like to focus on monetary policy, but monetary policy is a distant third in terms of the importance in determining economic activity and inflation rates. And politicians, who have been primarily responsible for the fiscal problems that we have, love to let the public blame monetary authorities for their problems. Monetary authorities, since at least the 1980s, have regularly gone to Capitol Hill and to the White House and said, you guys have to get your fiscal policies in order. And in fact, the fiscal policies have gone the other way. In 1980, we had a $58 billion deficit and less than $1 trillion of debt in the US government. Today we have, a $1.7 trillion deficit and something like $32 trillion in debt. Politics will continue to be dysfunctional, and that will be one of the major problems for the economy and for financial assets. CPM Group expects gold and silver prices to rise, perhaps more slowly for most of 2023. So they actually did pretty well compared to other assets last year. We think they probably will continue to outperform other assets. But we do think that the bulk of the increases in gold and silver prices lie beyond 2023. We've seen pretty strong recovery from very low levels over the last 2 months. CPM Group had issued trade recommendations on December 13th, saying that gold could get to $18.50 and silver to $24.75, I think, or $24.70 within the last 2 weeks of 2022. Somebody obviously conspired against us because those targets were not reached until today, the 3rd of January. So clearly the gold and silver prices were suppressed until today. That's a joke. We do think that there's some scope for prices to pull back. They will not rise straight up. We do think that they will be weaker perhaps in the second and third quarters. First quarter has a period of seasonal weakness, of seasonal strength, and that probably will continue to be the case. Platinum got up to $1,100 today. It's backed off a little bit. We think that platinum prices will continue to show strength and will continue to try to build a base above $1,000. And palladium prices have been off sharply today, and we think that they will be most probable to decline further over the course of 2023. Finally, some investors will continue to lose money betting that the world's financial and currency systems are falling apart and that the world is running out of silver. As I said, truth will be harder to find, and there will be an increase in misinformation by propagandists. Some things we can say will happen with a greater degree of probability. CPM Group will be releasing its gold yearbook on Tuesday, the 28th of March. We're changing the title somewhat, adding a subtitle. Right now, our plan is to call them the Gold Yearbook Review and Outlook, Silver Yearbook Review and Outlook, Platinum Group Metals Yearbook Review and Outlook. We're doing that for one reason. We have been told by a lot of people that they don't quite understand what a yearbook is. So by adding the words review and outlook, maybe they'll understand that what we're doing with the yearbooks is reviewing the history of gold, silver, platinum group metals in 2022 as well as previously, providing tremendous volumes of credible data, not incredible data, on supply, demand, investment demand, inventories, central bank activity in the gold market, central bank holdings of silver, coins, investment demand, I already mentioned, and an outlook, projections for supply and demand in 2023, and an outlook for how we think the market will shake out. We don't provide overt price projections, but we do talk about where we think the prices are going directionally in the yearbooks. I took over what is the research operation that is CPM Group when it was the research department at J. Aaron and Company. And we used to produce books that our yearbooks are the descendants of what were the J. Aaron Gold Review and Outlook, Silver Review and Outlook. I added the Platinum Group Metals Review and Outlook when I came in 1980. The first one was published in 81. So it's kind of nice to go back to the original name, and a name that is hopefully more understandable and descriptive as to what these yearbooks are. We will be adding links to our website by Friday, where you can come and pre-order the yearbooks at any time at a little discount to the price once they're published. We're also starting to post reports that we produce for Monex Precious Metals and Gold Bullion International, both on our website, cpmgroup.com, and on our Bloomberg pages. We're posting those now. A lot of the GBI reports are up already, and the Monex reports will be posted shortly, possibly this week, on both our Bloomberg pages and our own website. In the meantime, we have the retail investment program, which provides investors at a lower price point than most of our wholesale research or institutionally oriented research. The retail investment program provides you with our shorter term price views, supply demand analysis, our yearbooks are included in there, and other factors. And then there's a host of other CPM services that are available to you to help you try to make 2023 a healthy and prosperous and happy year of transition. We'll talk to you on Friday. Take care in the meantime. Take care of yourself and those around you, and work for a better world.